record. Admit all. Hello, everybody. Welcome to NDA's webinar, What to Expect from the Biden Administration. I'm Jeff Lambert. I'm the Executive Director of the National Demolition Association. It's great to have you all here today. As you know, new administration has come to DC, which means, of course, changes in the Department of Labor, new priorities, new staff, new head of the agencies. As part of your membership in the National Demolition Association, you receive a number of member benefits. One of those is discounts on goods and services, and then discounts on human resources. We have partnered with an organization, Affinity HR Group, to offer our members discounted HR support. And the head of Affinity HR, Claudia St. John, is joining us today for this presentation. Claudia is an author, a speaker, consultant, and professionally accredited HR executive with broad industry and international experience, helping large and small companies develop people strategies for their business success. NDA partner Affinity HR Groups helps our members with full scope of HR issues from workplace investigations, legal compliance, and strategic planning and workforce development and recruitment. As I said, with a new administration in the White House, it means many changes are on the horizons. We know there will be a variety of workplace changes in 2021. Claudia is here to discuss the potential HR impacts from the Biden administration. Topics will range from expanded FFCRA provisions, regulatory workplace protections, and federal minimum wage increase, in addition to answering your questions throughout the presentation. So being as we're a small group here, I think we had 19 people RSVP for today's meeting. Please feel free to answer your questions live, or you can use the chat box for this, and either directly to the group or to Claudia if you'd like to just ask the question of her. Or if you just want to unmute yourself and jump in, you're free to do so. So welcome everybody, and Claudia, thank you so much for being here. I will hand the floor over to you.
Awesome. Thank you, everybody. I'm delighted to be here. So as Jeff said, this is a relatively small group. I got a lot of stuff that I wanted to share with you. So I really encourage you to either unmute yourself and ask a question, or shoot me a text or a chat, or shoot Jeff a chat, whatever works for you. If you have that question, I guarantee your peers on this call have a similar question. I also know that whenever I talk about HR, some folks don't really like to ask questions. So I don't know, you can't get it wrong. So I encourage you to ask those questions as you go along, but feel free to chat anyway. The whole point of this session is to give you sort of a heads up on what's happening and answer your questions. My contact information is here. At the end, I'm going to also give the contact information again, but I'm going to, don't hold your questions. Let's answer them as you come up with them. So I'm Claudia St. John. We are your HR partner. So we are here to help NDA members. That's our job, is to be a partner and a resource to you. If you go to our website, so it says affinityhrgroup.com/NDA. If you go there, you will see the full menu of services that we offer to NDA members and our pricing. So check that out. Also, we've worked very closely with Jeff and his team to help populate the COVID site to give you information and to sort of help with all of that. There's a lot of resources in there as well. So I'm going to circle back with that contact information, but if you want to screenshot or take a picture of that, or circle around at the end, if you're not comfortable asking questions here, I'd be happy to answer them as we get into it. So what Jeff asked me to talk about was what to expect from the Biden administration, and I am going to touch on that. But before I do, I wanted to also address some things that are happening around the Biden administration that affect what the Biden administration is going to put forward. And the first, of course, obviously, we can't talk about anything unless we talk about COVID. I guess I have one question for all of you. Can you do me a favor in your chat function? Can you raise your hand if you have someone or some part of your team still working remotely? I'm trying to see where I will see your responses. All right. Do you all see how to raise a hand? Maybe not. Here we go. None. Okay, so David has none. Anyone else have, or raise your hand or just chat with me if you've got folks working remotely. All right. I don't see your responses. Do you see them, Jeff?
Just David's.
Okay.
Anybody else? Your chat function down at the bottom menu bar.
All right, so maybe none of them do. Maybe they don't have anyone working remotely. Could that be the answer? We have some, but they were working that way before COVID. Okay, good to know. All right, so I won't talk too much about it, but I'm just going to go through some issues related to remote work because I think all of us experienced some professional or someone that was going out. And what we expect as a labor trend is that that's really not going to change. We're expecting a lot of hybrid working going forward. So even if it's not all of your workforce, it may be part of your workforce, a component of your workforce. I do know that NDA members oftentimes shift employees around when they go to demolition sites. And so you have folks that are working here and there on site, and there's an issue that I want to talk with you about that. But as it relates to remote work, we continue to field questions about how to manage performance. It's a huge issue. I'm not going to focus too much on it here because obviously it doesn't seem to be a big issue for you. But if you are having issues with employees that are working remotely, do reach out to us because there are ways, there are tools, there are systems, there are practices for managing performance that also improve with employee engagement and communication. These has been a very big challenge for 2020, and we're seeing now that a lot of employees got a bite at that apple of being able to work remotely. They kind of want some more of that added flexibility going forward. So we are going to expect to see more remote work and more pressure for remote work going forward to deal with the tight labor market. The next issue is a big issue for all of you. And this is something that you probably are dealing with all the time now. But it was a surprise to many businesses when their employees went out because of COVID. A lot of them went to mom's or went to their friend's house or went to their in-laws, and they left the state. They were still working, but they left the state. There are huge implications as a result of leaving your state or of taking an employee that may live in Detroit and your office is in Detroit and you put them in Mississippi. According to state law, you may or may not have to be following both tax law and labor law of the state where that employee resides. So a lot of people didn't realize when, their accountant went to go live in Utah for the duration that they may be responsible for paying income tax and employer tax in Utah, including unemployment insurance and workers' compensation. And they may also be responsible for complying with the labor law around leave, around breaks, around wage and hour issues that apply in those states. The confusing thing as it relates to COVID and as it relates to these states is that some states said, you know what, if you guys are here sheltering because of COVID, don't worry about it. We're not going to tax you. We're just going to give you a pass. Whereas other states said every hour earned in this state is taxable in this state. So those are issues that apply to all of you who are moving employees around from project to project, from situs to situs. So if you have even one employee working in another state for one project on one job, those tax laws and those labor laws probably apply. even if it's just for a short period of time. Every state is different. The duration of time for you to be in the state is different. So it does vary, but I'm really surprised that we haven't gotten more questions about this. And what makes me nervous about this, particularly for you all, is that if I haven't gotten questions, either it means you know this and you've got it, which is great, or you didn't know it and this is a surprise to you, and that's very concerning. So I just want to put the red flag out there. If you've got folks that are working out of state, whether that's customary or not customary, I just want you to know that there are tax and labor law implications that may apply. Any questions related to that any of you may have? And just unmute. I'm not going to look at the chat. It's too challenging for me to look at the chat. But any questions? If you hit a space bar, you'll get unmuted. All right, I'll keep going. If that surprises any of you, please call me so we can have a conversation. Another issue that was really a major issue is cyber law. So a lot of employees went remote, and all of a sudden we did not have the servers and the firewalls that would normally be in place if you were working in the workplace. I don't know if you know about Twitter, but last summer, Twitter was hacked, and it was hacked by a bunch of a couple of 15-year-old criminals, punks, really, little young psychopaths. And they were able to put in place and take over Elon Musk, Joe Biden, Barack Obama, Kim Kardashian, Jeff Bezos, you name it. They took over their Twitter account. The way they did that is they knew that Twitter went remote. And so these little guys called employees, got the employee roster, called and said, hey, this is Jay from IT. There's something wrong with your Twitter account or with your account. I'm just going to shoot you a quick re-login so we can refresh. And they shot them this email and they typed in their username and password. And by doing that, just by hustling, they got all of these employees' usernames and passwords. And through that, they were able to infiltrate the system and take over all of Twitter. So that's what a 15-year-old can do. And you may think that that's not important to you because you're not that big, nobody's really paying attention to you, but a lot of criminal elements out there are out there to make money and to hold your data and to hold your systems ransom. So it doesn't take a big company to make a lot of money for a criminal enterprise. So you all need to be focusing on cybersecurity, particularly if you have folks working remotely. Any questions? All right. Just chime in and jump over and give me a shout. The issue that we do face now is return to work. So vaccines, I'm going to talk about those really quickly, and then we'll get on to the Biden administration. Having a preparedness plan for coming back to the workplace. If you all are back, do you have a preparedness plan in place for the vaccine? Now, we all hope that we're nearing the end of this current pandemic, but you need to realize that we're still at levels that are as high as the second highest spike than we've had all along. So these are still issues that are very relevant, and they fall right in your lap. If you're doing HR or you're overseeing HR, these are all your responsibility. We have sent to NDA a return to work checklist that we keep updating. We have it. Just shoot me an email or collect my information at the end. Happy to give you the sample one that we have. But having a preparedness plan in place and a return to work checklist is really important. So we have that available for you. Again, returning to work, you just need to weigh whether you want to return to work or whether you need to return to work. And if you don't need to return to work and you just want to do it because, well, you want, butts in seats really to manage them and make sure that they're doing what they should be doing. While the pandemic is still out there, before we've been able to really roll out these vaccines on a broader scale, you may want to consider delaying that a little bit until we can get just a little bit farther down the road, because we are still, just yesterday and today, I've probably fielded 5 calls from clients who have brand new COVID infections in their workplace. It's not gone away. It is still very much there. So just keep that in mind. So on the issue of COVID vaccines, again, I'm going to just talk about this really quickly. I'll be interested how many of you are thinking about requiring vaccines of your employees. What we do know is that the EEOC has said that employers are within their right to mandate a vaccine. So you have the right to do it. But our question to you is, just because you can require it, should you require it? What the EEOC has said is that if you do require employees to have a vaccine, you need to make sure you have reasonable accommodations for those whose health conditions or religiously held beliefs preclude them from having those vaccines. The questions around, well, what are your religiously held beliefs, or what are your medical conditions, or what those screening questions can be very invasive in themselves and can violate an employee's HIPAA rights, disability rights, equal protections under the law. So you need to be very questioned about how you ask those issues. So while yes, you can mandate them, we're more encouraging you to encourage them than mandate them, because the legal, while you can, there's still a lot of pitfalls that you can get into in terms of collecting the information, collecting the data. What do you do when somebody doesn't get vaccinated? Do you adversely impact them, and are you in violation of their rights to do so? So if you're considering mandating them, give us a call. You, of course, do need to provide reasonable accommodation. What are the consequences going to be if you're not going to require, if you're going to require that they have the vaccine? Are you going to fire them if they don't? Are you going to reassign them if they don't? You really need to think through what those consequences are going to be. And if you have incentives, which of course we would encourage you to do, because we want people vaccinated, we want to get through this whole pandemic. If you do have those incentives, just remember that they may be taxable if you do financial incentives. So just some things to think about. And remember that it could be ongoing, that these are issues, the issue of vaccines, if we're going to need boosters, if we're going to need additional stuff, whatever precedent you set now, you're going to need to pay attention to going forward. So any questions on COVID, on vaccines, on any of the stuff that I've talked about? Because I'm going to move on to Biden now. So any questions? Nope. All right. Feel free to text me. So the Biden administration. Well, the biggest issue for us to focus on with the Biden administration is, of course, the American Rescue Plan. That was just passed last week. We're all still scrambling to figure out what's in it, and there is a lot in it for you to know about. So I'm just going to take them in chunks. I apologize. It's going to be the ugliest slide that I have in this entire slide deck, because it's going to be filled with a bunch of words, but they're important words. So here's what we got. So basically, the American Rescue Plan Act extends the emergency paid family leave and the emergency paid sick leave through September 30th on a voluntary basis. So both of those expired in December, but the Congress in December extended them through the end of March on a voluntary basis. So they continued as they were on a voluntary basis. These are paid leaves that are offered offered to employees. Your company has to be fewer than 500 employees in order to get those subsidies that you provide reimbursed by the federal government. So anyone who has fewer than 500 employees can now voluntarily offer paid family leave and paid sick leave through the end of September. So the paid family leave was a 12-week period that they could take for time off in order to care for a child. The paid sick leave was 80 hours of pay for if you were sick or taking care of somebody who's sick or you were quarantined. So the sick leave was for people who were impacted by COVID from a quarantine or an illness or testing perspective. The family leave was really for childcare. What this new law does is it resets the clock for paid sick leave. So if you had employees who exhausted their 80 hours, their 10 days of paid sick leave, you now can re-up the clock and give them a new clock, a new bank of 80 hours available for paid sick leave. So that's now available. The other thing they did is they took the issues that qualified you under the paid sick leave. So you were quarantined, you were being tested, you were sick, you were caring for somebody who was sick. they took those conditions and said, now you can apply to paid family leave if you are sick or quarantined. So whereas before, if you were sick or quarantined and had exhausted your paid sick leave, you couldn't use the paid family leave because that was only for childcare. So now childcare is extended for those conditions. What is unclear, and this is what's so funny about all of these laws, what is unclear is whether or not this law resets the clock for paid family leave. It's explicit about resetting the clock for paid sick leave, the 80 hours, but the paid family leave, it doesn't really speak to that. So we don't know whether or not those 12 weeks are reset. So you need to, we need to be paying more attention to see what they come out with, because right now, if they weren't, the law was not clear enough. So we have to wait for the Department of Labor to issue guidance on that. Before, the paid family leave had 12 weeks of leave, 10 weeks were paid, 2 weeks were not paid. So going forward, that the 12 weeks are now all paid at 2/3 of pay, up to a cap of $200 a day. So it just extended the additional 2 weeks. So the overall cap on pay that you can receive under the paid family leave was $10,000 per employee. Now it's $12,000 per employee. But again, we don't know whether that is reset or whether you're still accumulating that from April 1st, 2020 through September 2021, or whether they're resetting that clock. So we will get that information back to you. So those are the changes with the emergency paid family and paid sick leave. Again, still voluntary. If you have fewer than 500 employees, still reimbursable by the federal government. But now there's more pay under the paid family leave, and you can take paid family leave for more reasons than you were able to before. Any questions on the paid family, paid sick leave portion of this act? All righty. I am comfortable with awkward silences, just so you know. So if you do have questions, I will stand here silently, uncomfortably until I hear from you. Hopefully, I won't have to do that. All right, COBRA, this is brand new. We haven't seen this before. So what this says is, now, if you offer health insurance and you have more than 20 employees, which means that you have to offer COBRA, you now have a 100% federal subsidy for any employee who was involuntarily either had a reduction in hours or let go. So COBRA says that you have to make the premium, the health insurance plan, available to all employees who are terminated. And the employee is responsible for 100% of the premium, the employee and the employer portion, and perhaps a 2% surcharge on the premium. This basically says that all employees who are involuntarily terminated, so they can't quit, if you let them go, or you reduce their hours so that they no longer are eligible for health insurance, the federal government will pick up 100% of the premium from April 1st through till September 30th. So this is a new benefit that's available. If you have an employee who declined COBRA coverage recently, they now will also have the opportunity to revisit that coverage now that it will be subsidized by the federal government. So what that means, you fire somebody on April 2nd, they will be given the option to elect COBRA coverage and will have that health insurance premium paid 100% through September. Let's say you had somebody that you fired in November, and they are currently on COBRA. They then would be able to apply to have 100% of that premium picked up from April 1st through September. If they were fired last March and they're given 18 months of COBRA, and their COBRA, let's say, ends mid-August, they could then have their COBRA coverage covered at 100% from April 1st through August 15th, or whatever their normal day is. So it doesn't extend the length of COBRA. So whatever your COBRA length is, still is, But anyone who goes out on COBRA has this option of 100% subsidy from April through September, and anyone who declined coverage is going to have a new enrollment period. So an absolutely new program. The question mark that folks have around this, and you should be talking with your health insurance providers, so get with your health insurance providers on what this enrollment period means, what notifications need to be sent out, all of those sorts of things. The question mark is what is involuntary reduction in hours or termination. So if they quit, they're not covered. There's only once before that they used this language, and it was in 2009. And so we're still unclear on what that definition is of involuntary separation. So that's still the outside question mark. But this is a new obligation that will be there for you to open this enrollment, to notify employees about this coverage. Any questions on that? It's kind of a big change. Okay, if you've got questions, I'm sure others will too. So just remember that. All right, so it also threw more money at the employee retention tax credit, at the Paycheck Protection Plan, and the economic injury disaster loans. So all of those pockets of money that you might have been able to dip into last year are still accessible. They have funded those again. They've put more money to those. And of course, the Paycheck Protection Loan, they have a second loan going through now. They've sort of changed up some of the definitions. There's a lot of variability in there. So I would talk to your lending institutions or check out the Small Business Administration website on the details of that if you're interested in that, if you've had any economic hardship as a result of the pandemic. They also, of course, extended the federal unemployment benefit to $300. So whatever the state unemployment benefit was, it's now, you add $300 to it. Before it had been $600, which was really tough for a lot of employers to get their employees back to work with that sort of subsidy that was going on out there. And that $300, for some reason, extends through till September 6th. I have no idea why September 6th. This is what they did. And then, of course, there's the stimulus money for families. For individuals, it's $1,400, and then it applies also to children and families as well. And then, of course, there's money that's been put in place for state, local, tribal vaccine distribution, child care tax credits, a lot of money. This is a big, big, big bill. There is a lot of money in it available to you. So if you have certain questions about it, please let us know. We will be communicating through NDA and Jeff on additional information as we sort of parse through it and figure it all out. But these two pieces, I think, are more important. And I don't know that the COBRA has really had much attention that this is a new liability and a new, not a liability, but a new requirement on you for notification. You don't have to pay anything more. The government will subsidize it, but it is a requirement on you. Any thoughts? All righty. Okay, so in addition to the American Rescue Plan Act, ARPA, we have a number of initiatives that we're expecting the Biden administration to pursue. The biggest one that we hear the most about is the minimum wage. There is a real push in order to get the minimum wage up to a higher level. It's currently at the federal level, $7.25. It has not been changed in over 11 years. And obviously, economically, our economy has changed, inflation has taken place. And so as a result, this really is a much lower rate than it was intended to be when it was designed originally. So we are expecting there to be a minimum wage increase. I don't suspect we're going to see a lot of movement on this anytime soon because we're still kind of bumping along economically. And the last thing they want to do is put an added financial pressure on small businesses as we're trying to get over the pandemic. And if they do put something in, I'm sure it will be scaled over time. So it won't go automatically to $15. What they're talking about is going to $15. Many states have already gone to $15. But this was there was a $15 minimum wage provision that was actually in the American Rescue Plan Act, and that got taken out because some of the more conservative Democrat senators did not support it. So still a lot of volatility on this one, but we do expect there will be a revision of the minimum wage. We also expect this administration, like the last administration and the administration, so Obama and Trump both have revisited this. So for you to have an employee considered exempt, so basically paying them a salary and not paying them overtime for any time worked over 40 hours, they have to satisfy both the duties test, so their duties have to be of some executive function so that you don't have to pay them overtime, and they also have to have a minimum salary. Until before the Trump administration, that minimum salary was $23,600 and change. Now it's $35,000 and change. So anyone earning less than $35,000 on an annualized basis has to, by definition, be considered non-exempt and paid hourly, or if a salary, be paid time and a half for any time worked over 40 hours. We're expecting this to go up. Under the Obama administration, they wanted this to go up to $47,000. So that means anyone earning less than $47,000 would have to be classified as non-exempt and earn overtime for any time worked over 40 hours. So we can expect that this is going to move up from currently where it is, $35,000. We're probably going to see it bump up into the $40,000 range. So keep an eye out for that. We do expect to see some form of movement on paid family leave and paid sick leave. You know, the Family Medical Leave Act is out there, but that's unpaid. And what we've seen definitely in the last year is that there needs to be some sort of paid leave, minimum paid leave available to employees. So what that looks like, we don't know. Again, the Biden administration enjoys a Democratic Senate and a Democratic House. However, those margins are slim, and some of the Democratic senators that he has in the Democratic caucus are pretty conservative. And so whatever we expect to see, we'll expect to see more than we've seen in the past, but not radically more because of those limitations of both the level of the caucus that the Democrats enjoy and the nature of some of those members in some of those states being more conservative. We're also expecting there to be some sort of revision about non-compete and non-solicitation agreements. Courts really do not like non-compete agreements. Basically, they restrict employees' right to go and work for a competitor or in the industry in which they are experienced. Usually there has to be a geographic limitation and a time limitation to these covenants that restrict an employee's right to go and work for a competitor, or the solicitation is an employee's right to solicit an employee that works. Let's say somebody leaves your employee, they can't then go back and try and hire out some of the employees that work for you. Courts don't like these. Many states, particularly California, they're pretty much invalid. You can't really, they're unenforceable in California. The reason why the courts are really mad about this and why we're probably going to see the Biden administration do something on this is that a lot of industries and a lot of positions, they're applying these non-competes, non-solicitations at levels of employees that don't really warrant them, like service workers, right? Restaurant workers. So a McDonald's worker is now subject to a non-compete agreement. So that means they can't go and work for any other fast food. This really restricts the ability for an employee to have the freedom to work at will. And so we do expect there to be some revisiting of non-compete and non-solicitation agreements, probably starting at the more non-exempt, hourly, non-skilled level positions out there. We also expect there to be a revisit of the independent contractor rules. Currently, there are a bunch of rules out there. The Department of Labor has one set of rules around independent contractors, and we've got the IRS has a different set of rules to determine whether someone's an independent contractor. And we add to that the whole gig economy that's really prevalent these days. So we expect there to be some tightening up and some revision of independent contractors. The rules that are out there were made long before we had the opportunity for gig economies. And we've definitely seen California dealing with this with Uber and some of the ride share and meal share industries that are out there. So we do expect there to be some revisit to both the IRS and the Department of Labor determinations for independent contractors. We also expect this industry, this administration, to be very pro-union. And so what we expect from there is their efforts to fill the National Labor Relations Board with more union labor friendly directors. We expect there to be a lessening of the restrictions to have the size of a collective bargaining agreement, the restriction of allowing employees to opt out of a union if they're part of a union drive. So all of these sort of little tweaks around union contractors, collective bargaining agreements, collective bargaining drives, all of these we expect there to be support, more union level support than we've seen in previous administrations. So definitely a very labor friendly administration. I will also say that we can expect this administration to reinforce and use to the best of their ability the tools that they already have in terms of OSHA, in terms of the Department of Labor, in terms of wage and hour compliance, so in terms of the EPA. So we expect the sort of deregulatory stance that we saw under the Trump administration to turn around. We expect the Biden administration to redouble the efforts for workplace investigations, workplace penalties, notifications, things of that sort within those federal agencies that already exists. We can expect there to be both resources and initiatives paid to OSHA, EEOC, Department of Labor, those regulatory bodies that monitor the workforce. So that's really what we have on the big ticket items that we have on the horizon for the Biden administration. I do want to talk about labor trends and what we can expect on the state level, but I'm going to pause for a second. Any questions about what I've discussed so far from the Biden administration specifically? Everybody loves HR. Okay, here we go. Labor trends. So all of this is happening in the context of what's happened in the workforce, and nobody can deny how dramatically 2020 messed up the labor market and really sort of set us on a new trajectory. So COVID created disruptions by having us deem essential workers, non-essential workers, work from home, no work at all, laying people off, not laying other people off, just complete disruptions. And some industries are just not back, right? So entertainment, travel, hospitality, restaurants, these are all still struggling to come back to full board. And what that means is that there are populations of labor pools that are available for work now, and then there are others that are fully employed. So we have this weird unemployment level that doesn't really tell the truth about what employment is, because there are certain sectors of the population that are unemployed chronically at this point, but then we have other ones that are as tight as they've been all along. So we have real disruptions in the labor movement, and I'm gonna focus on that in 1 second. Of course, continued remote work, we do expect going forward, and a recent Forrester survey said that 60% of businesses expect to be hybrid at some level going forward permanently, and 10% say that they're going to be giving up their lease. They're not going to have a brick and mortar workplace going forward. They're going to be all remote. That's 70% of the workforce is going to be remote at some level. We did not see this coming a year ago, and a lot of folks who started working remotely, once you get a bite of that apple, you don't necessarily want to go back. So we do expect continued remote work in a hybrid level, and all of the issues that relate to that in terms of workforce performance management, occupational safety and health, you name it, wage and hour, all of those things are going to have to adjust, employee engagement, performance management, all those things. So the labor market, what's really interesting about the labor market is that we see that there are people that are unemployed. Our current unemployment level is around 6.5%. We're expecting it to sort of level out around 5.5% at the end of the year once we get restaurants and everybody vaccinated and back up and running. But I can tell you that the labor market was wicked tight in 2018, in 2019. It started off really tight in 2020. All of you know this. If you were trying to hire, I guarantee all of you at some level struggled to find experienced talent because everybody had a job. Everybody who wanted a job had a job. And so it was incumbent upon you to go out and find them. And as recruiters, we were very busy trying to headhunt and fill these positions. That is still the same. Even though we have these high levels of unemployment, they're not across the board. So we still have a really, really tight level of employment out there, and we are having as hard of a time filling positions now as we did in 2019. So this is continuing, this tight labor market, and it's having a dramatic impact on wages. So what's happened is, in order to hire that person who has experience, who you want to bring on, you might have had to pay more for that talent than you had expected to. And you might have brought somebody on with less seniority. You might have brought somebody on with less experience than the person who was already there. And you're paying them almost at or more than your existing talent. And that creates what's called wage compression. So you brought on talent at a higher pay, but you didn't keep your internal pay up. So you have this internal pay equity. And then you also have this elevated minimum wage that's out there. And so if you have hourly workers at or above the minimum, now that the minimum wage has come up, you need to have some sort of external parity so that you can push your wage up. So basically, the long and the short of it is, people's compensation is totally out of whack. We have signed more compensation projects in the first 2.5 months of 2021 than we did in all the 3 years previously combined. It's just something that people are now realizing. It is really hard to find good talent, bring talent on, and pay good talent. And with all of these financial pressures and the need for people and the other pressures for people to change jobs because of work-life challenges that they may have, we've got a real compensation tsunami out there. So just know, if your wage stuff is all sort of messed up, you're not alone. You're in really good company. And it is now is the time for businesses to take a look at their compensation structure for both internal parity and internal equity and external competitiveness. Finally, we put together a labor forecast that sort of captures all of these things. I know that Jeff and the folks at NDA have distributed it. It may be on their website. It's certainly on ours. If you would like our labor forecast, happy to send it to you. Of course, everything is free, so happy to share that with you. And I'll get you my contact information at the end. So I'm just going to wrap up here with just a little bit of overview of what we can expect on the state level. Now, I know that a lot of you are operate in multiple states. And again, you need to make sure that you are following the labor law and tax law in all of the states in which your employees work, not just your headquarters. And even if you move them around, some states require that you comply on day one, and some states give you a grace period or an accumulation of the number of days that you're in that state to apply. So these are trends that are happening all across the United States. So chances are they're in at least one of the states in which you're looking at. So the state and local initiatives, one of them is COVID liability shields. We're seeing a lot of states wanting businesses to come back up and running. They want people back at the office. They want people back in their jobs, and basically reinvigorating the economy. But employers are a little reluctant to do that because they don't want to be at risk of making their employees or their customers sick. So we do see many states considering liability shields. This is something that has been batted around on the federal level. Republicans tend to want to have these liability shields for employers to open up business, and Democrats don't want to create an incentive for employers not to take the safety and health of their employees seriously. And so this is a political football like everything else, and as a result, it's really not doing anything. But on the state level, we are seeing some movement on COVID liability. Also, COVID vaccines. Many states view the private employment sector as the way to get their populations vaccinated. So some states are trying to require that employers mandate vaccines in order to get employees back to work as a way of getting these vaccines out in the population. We have other states that are trying to restrict or prohibit employers from mandating those states. Again, political issue, so it depends on where you are. It's football that's out there, but it is a conversation that's happening in states across the United States. We do expect to see some paid time off leave, and we've seen a lot of states initiate leave since COVID. Some of them had it beforehand, some of them are rolling it out now. So there are new leave requirements that are out there. So keep an eye on that if it may apply to some of the states where your folks are working. Obviously, again, minimum wage. I think it's 29 states have increased their minimum wage within the last year. So you can expect that to be a big issue. We're seeing now minimum wage fights in southern states where you typically do not see a lot of initiatives around minimum wage. So this is going to continue to be an issue. And keep in mind that a lot of these changes that happen on the state level don't happen January 1. They may happen mid-year or some period of time during the year, and you may be compliant at a time when you're not even paying attention to it. So please make sure that you're keeping track of all of those regulations as they come on board. Pay equity. Pay equity, simply said, is that a lot of women and minorities typically make about 70 cents on the dollar for their male counterparts. And one of the things that these laws do is they restrict you from asking what the employees, the candidates' previous salary was and basing their future salary on what their salary history was. Because if there's an inequity, if you base their next salary on the salary that they had before, you're just perpetuating the inequity. And so these laws basically say you cannot ask what the employee's previous salary history was, and you cannot base the pay for that position on what their previous salary history was. So it just restricts you from asking those questions. It basically requires you to price the position for the position, and irrespective of what the the candidate's previous salary history was. A lot of these are out there, and they all, because they're state-based, they're all slightly different. They're all worded slightly differently. But that is an issue that's out there. Also in the hiring process, ban the box. These are laws that basically tell you not to put on the employment application a box that says, have you ever been convicted of a crime? Sometimes they say federal, sometimes they say, misdemeanor or above. Sometimes they have no definition, just have you ever been convicted of a crime? These ban the box basically say do not put that on the employment application because it creates a barrier to employment for employees or for potential candidates who may be qualified and for whom their crime may not be relevant to the position, but that box keeps them from gainful employment. So you can ask about criminal history, but later on in the process, once you've vetted them, and if you make an adverse employment action on them because of their criminal history, you have to tell them why, and you have to show that the previous criminal history was relevant. So for example, if I, as a 22-year-old, had a DWI when I was in college, and that was a misdemeanor, let's say, and you try to hire me as an account representative, in a call center, those two things may not be relevant. It may be so long ago that it wouldn't apply. So again, all these ban the box legislations are different, but they're rolling out in a county by county, city by city, state by state basis. So it makes it really hard for employers to keep track of. So we just recommend that you don't have that box on the application so that you don't run afoul of those laws wherever they are. Again, you can ask those questions later on, just not on the employment application. Also non-compete agreements. So being mindful about compliance with non-competes. And if you don't need a non-compete or you don't need a non-solicitation, revisit those, because a lot of states are really cracking down on the scope, the duration, the type, the level of employee for whom non-competes can be enforced. And again, they're kind of following the court's dislike of these things because they really don't like the restrictions that these covenants put on potential employees, specifically less senior, less executive level positions. So those are sort of the things that we're seeing on the state level. One of the things that I will share with you is that through the NDA, we have an HR support plan, which is a subscription model where we keep track of all of these federal, state, and local laws, depending on where your employees are. And so I think NDA is going to be rolling out some information about that, I think today, maybe tomorrow. But we can support you in keeping track of some of these legislations, but we're always just here to help answer your questions. We are your resource. We're available to you. I encourage you to check us out on YouTube. We have a channel you can subscribe to on YouTube where we put a lot of this stuff out there, and of course connect with me or with Affinity HR Group on LinkedIn. So that's kind of me just talking nonstop for 50 minutes.
So Claudia, I do have a couple of questions for you.
Oh, good.
And we will be posting this presentation on our website. So if you missed a chunk of it or whatever, we're going to be posting that for everybody as well under our education drop-down menu.
Great.
So Claudia, I did have a couple of questions for you.
Sure.
My past experience, I worked in state and local politics, and I saw firsthand the severity of some of the laws in regards to taxation requirements, health and safety. You mentioned, California, of course, has its own Cal OSHA.
Yeah.
That is sort of 2 or 3 steps above where OSHA is in terms of enforcement, et cetera. So my question for you, because it's one of the number one questions that I get, because all of our folks are remote in some capacity, meaning all of our companies will take a project in Louisiana and they may be based out of Georgia or vice versa. And just knowing the tax implications state by state, and I know that timeframes for that vary too, because I think if you have an employee that's based somewhere for 30 days, it's different than if you just have them there for a couple of days. So can you talk a little bit about time-based requirements by state? I know that not to go through every state, but just generally, what are those time-based requirements like?
What I will tell you is that there is no standard. And, this gets to, we like to see deregulation on a federal level because that helps businesses, it helps businesses. But the problem is then you have these states that will step in the absence of federal regulation, and then will create their own, and that creates this mismatch. So the problem is, no, I do not have an answer for you. What I would say is that wherever your employees are posted, you need to look uniquely at that state's taxation and labor law implications whenever you move them around. And I would say usually 15 to 30 days is the minimum. Sometimes it's a number of hours. I have this challenge because I do a lot of public speaking and I'm in and out of states all the time. And there's some states that if I was really keeping track of it, I would be taxed for, the 5 days cumulative total that I might have been in that state delivering a workshop or a presentation.
Right.
So some states are really, really strict about it, and there really is no standard. We do keep track of that. We can keep track of that for you. But it is, this, you and I talked about this, Jeff. It blows my mind that this is not just the hardest thing that your members are dealing with because there is no consistency, really. It is federally, but on a state level, it just depends on where they are and how long they're there. Are they in and they out? Are they residents? Are they filing there? Are they not filing?
Right. And in some states, it can be, as you mentioned, rolling. So if you spent 2 days in Connecticut and then in the fall spent 3 days there, and then, in December, another 4 days, oops, all of a sudden you've tripped over that line and now you have to report.
Yeah.
So, and there's no better example because when COVID first hit, of course, essential services. So even though the federal government issued guidelines through the CDC, every state decided what their essential services were. So you just saw this patchwork, and we had members calling us. I'm not sure where we're at. We of course did the legwork and figured it was only a handful of states that didn't offer essential services to construction and demolition, which we were happy the CDC included us in. But still, it's like that is the perfect example writ large of how states can vary on some of this stuff.
Well, and we have it just in my little company. I have slightly high blood pressure, which I'm really excited about for the first time in my life because I got my COVID vaccine. And Lisa Ritchie, who has worked with me and has unfortunately suffered from high blood pressure since she was like in her 30s, does not qualify. And Beth, who's in North Carolina or Georgia, whose husband is a pilot, does not qualify. And my client, who has a promotional products company in North Carolina, qualifies because they were importing PPE. And so now they're essential. So all these like 28-year-olds are all vaccinated. It makes no sense. It just makes no sense whatsoever. So,
right.
Yeah.
I mean, we had a hard time, right? We had a hard time with this, and you mentioned the COVID resources site. So, I mean, we do put that up for all of our members.
Mm-hmm.
And there's a link in there to check where your states are at for this type of thing. So what, is it 1A, 1C, who's in 1A, 1B? So that's on our site. We try and aggregate some of this stuff as best we can, but it's, with, like you said, some localities, it can get really tricky. And then, the other question I did have for you, and I know that I'm going to ask you to sort of a crystal ball here, prognosticate in terms of minimum wage. Now, you mentioned the Democrats, it's very slim, by one majority in the Senate, very slim in the House. What is your sense that something will get passed?
I think we are seeing enough momentum also in the Republican caucus for those lower level positions to support a scaled up minimum wage. I am certain we will see something. The Trump administration was a big proponent of this as well, that they wanted not so much the minimum wage, but in terms of stimulus and in terms of economic support to populations, which was not typically a Republican talking point, but it was under the Trump administration. So we do see some interest in that as well. And we also have a lot of states that are at 15, and not just New York and California, although they are now working their way up there. But we just recently saw, I think it was a ballot initiative in Florida to increase the minimum wage in Florida, which we wouldn't have expected. So I think there is enough momentum and enough realization, particularly with this widening gap between the top of the economic ladder and the bottom of the economic ladder, that minimum wage is just not really holding true. And the truth of the matter is, I don't know any of my clients who pay minimum wage for their frontline hourly workers. And we work with janitors, we work with car wash, we work with oil change, we work with restaurants. There are very few businesses that are paying minimum because the labor market's been so tight. You can't get away with paying minimum. You're competing against the very bottom of the rung. So I do expect to see a minimum wage. That said, Jeff, I have been wrong on pretty much every prediction I have ever had in the last 18 months recently. So,
you and I both.
Take that, you get what you pay for. That was my free advice. So, but that I would expect that. I definitely would expect that minimum but to go up gradually and
right.
Maybe to be tied to cost of living adjustment. Who knows what this will look like, but 725 hasn't been touched since 2009, and I just, over time we do revisit it. I mean, we have increased it. There has been bipartisan initiative in 2009 to increase it, so I expect we will have that again.
Right. The other question that I do have for you, and you briefly mentioned independent contractor.
Yeah.
And my question for you is, because I think the Trump administration just rolled this back, and now Biden administration wants to roll it the other direction. So we're kind of flipping. Like, how much change do you see in this? Because this was sort of a long fight, I think, for the Trump administration. And now, do you anticipate an equally long fight to reverse this, or do you, like, how do you see the stars aligning on this?
Well, you know, it's interesting. I don't think this, because this is more of an administrative function. So it's really the definitions that exist at the Department of Labor and the definitions that exist in the IRS. So I don't think that this is so much of a political battle, because it doesn't have to work its way through Congress. Like other things have done. And currently under the Department of Labor, they have sort of a control test. So how much money do you earn, but also how much autonomy and independence do you have? What's the length of those contracts? Do you walk and talk and smell like an employee? Because if you are, you probably are an employee. Whereas the IRS really sticks more to a financial control side of it. So I think this is an easier slam dunk on the independent contractor side than some of the other initiatives. But I do think the complicating factor here is that the independent contractors are a much bigger part of our economy now than they have been in the past, and that there are just so many app-based employment opportunities, and there's just a new workforce. It's just a new way of doing business that I think that will be a bigger challenge for them, is putting together, not just passing it, but putting together something that's reflective of what the labor market is and will be going forward. And that's what's changing. And I think that's what complicates it more, not the political side so much as trying to get it right.
Right. Well, I'm going to hold any other questions, because I know that we probably have some folks out there that have maybe one or two questions that we can get to. But thank you.
My pleasure. I'd love to answer your questions. Of course, I also have my contact information, so feel free to contact me directly if you're feeling not in the mood to ask here. But I assure you, I must have left some questions somewhere. I've confused myself on a couple of occasions on this, this webinar.
All right.
All right.
Well, I think, as I said, this will be up on our website. Claudia, it's always a pleasure. We appreciate your insight, and in particular, when things really went in a wild direction last March, your contributions to our COVID resources page. And stay tuned, folks. We'll continue to have Claudia, you're going to be on our podcast in April discussing some of these very same issues. So don't hesitate to contact her or myself if there's anything you need. Thank you for being members, and Claudia, thank you for your partnership.
Thank you for having me. Thanks, Jeff, and hope to hear from you all. Good luck and stay safe.
Stay safe. Bye now.